Well, when we are looking at the poll numbers for HDFC Bank for Q1 FY23, we're seeing that the net interest income will go up by around 16.5% when I'm looking at it year on year. A healthy 3+% even sequentially, so strong growth there. We're expecting that number to come a shade below 20,000 crore, so watch out for that number. When we're looking at the operating profit though, it's far more tepid. It's probably up around 8.5% It's expected to come in largely flat when I'm looking at it sequentially versus Q4 of FY22. Expected to come in around that 16,400 crore mark. In terms of the provisions are expected to see a bit of an uptick, 5% uptick in terms of the provisions when I'm looking at it sequentially, from that 3,300 crore expected to go up to around 3,500 crore. And PAT as a result will come in slightly lower in comparison to the Q4 FY22 PAT. It's expected to come in at around 9,800 crore. But when I'm looking at the provisions number for Q1 of FY22, that number was around that 4,800 crore mark. So, the PAT clearly will see a good jump as a result of that. PAT is expected to go up almost 27% when I'm looking at it year on year. In terms of the numbers already disclosed, of course, advances growth has seen a good uptick, 2% sequentially, and 22% when I'm looking at it year on year. Deposit growth also has been quite decent, 3% uptick on the deposit side when I'm looking at it sequentially, almost 20% when I'm looking at it on a year on year basis. CASA growth has been quite decent as well, 20% growth on the CASA front, but the CASA ratio has come down when I'm looking at it sequentially, so that might continue to be a concern for HDFC Bank. With regard to some of the other commentary, one will be on how NIMs play out. Of course, NIMs was a matter of grave concern, especially for investors at the end of Q4 FY22. So how NIMs are going to be playing out even going forward is something that we would have to watch out for, especially in this rising rate environment. The second piece will be the fee income as well as the treasury income, as to how that is playing out. Of course, rates going up means that there will be some treasury losses which will get factored, which will get booked. How much or what is the extent of that will also be under watch, and asset quality and slippages will be looked at. Of course, the last point which will be a key watch out for will be the merger and where that is progressing. So keep your eyes out for these few things.